The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Technical Friday. This is the 17th of March, and we're looking at the Dow down 161 at 32,089. So let me do this. I'm going to go through each thing. I'm going to give a little time to it. But first, I'm going to run through the indices. The Dow is down. It needs to get above 32,330 to say it's either extending today's leg, yesterday's leg A, or it starts a new leg B on Monday. But this is really important because the histogram of the MACD in the daily chart is improving, but it's still very weak. The 9 is still way under the 14, and the stochastic still down at 25%. That's a big ask, and the Dow is now the laggard. It used to be the leader, now it's the laggard, and you can see it's held so far this week. It's held this Chapman wave inside track. Was a repellent zone. Now it has to become a propellant zone, continue being a propellant zone. It is so far, and that means it has to move quickly back into the this rectangle with the large rectangle with an arch formation. It has 2 bars. We can say 3 bars. For the weekly chart of the Dow, I'm going to just say 2 bars. This is the second bar underneath the low that was made the week of, let's just go to that, and 38,654, the week of the 16th of December. So last week we closed underneath that. This is the second bar. I'll give it a third bar, but it's really important that it gets back into that rectangle without breaking this key support. The key support now is at, well, it'll be next week, so 31,300. And here we are at 32,060. The S&P is slightly different chart, actually a little bit better chart. It's holding quite nicely down 862 at 39.51. It's in, I forgot to type this in. It's in a leg B. Could be a peak B if there's no new high above yesterday's high in the Chapman wave methodology. I'll extend these. Oops, I'll extend these. I got a caller. I'm going to go to the caller in a moment. Here we are. All right. Caller we're going to go to right now is going to be Ari in Arcadia. Ari, how are you?
I'm doing very well, Basil.
I should say GDX, Ari. Oh, no, what was it you were looking at? The GOLD, was it? You had it for years. You were looking at that. How are you doing?
No, we did our GLD.
Our GLD, I remember that. Yes. I should have remembered that. Yes, so you'd like to look.
I'm doing the same thing, but I'm using WPM.
So WPM is Wheaton Precious Metals. I've liked this chart a lot. I've been waiting for it to pull back a little bit. It had a Chapman wave red Roman candle yesterday, which meant that if today it went into the 43 level, under 43, and held it for over 60 minutes, it would probably test the low of yesterday. If it closes above the high of yesterday, which is 44.15 in this particular candle, that's really a good action. I'd like to see it do that 2 out of the next 3 days. Most importantly, if you're looking at this Chapman wave, I have this falling axe formation. It's like a cone, expanding cone with lower highs and much lower lows. Now, if that is able to, the 1-to-1 would say that it should get to the 45, 60-ish area. And I would need time to be on the side of this particular pattern. So that would say by Tuesday or Wednesday, it needs to break above the high of what is today, Friday, of Wednesday's high, 44.83. And if it does that, that starts a leg B with the technicals approving, because the MACD is strong. Stochastic's holding at 88%. On-balance volume is a little weak, which means that you've got time, because if the on-balance volume gets to an overbought level, this price will be much higher. It isn't yet. It's actually just mediocre. The little gray relative strength is starting to improve quite a bit. I like it very much. It did make a peak E, but when I looked at it the other day, I said, I can't put a down arrow on this, even though it's a very sharp move down, because the 9-period moving average is still way above the 14. And that's a really good sign. So the monthly chart is not that great. The weekly chart has improved tremendously, although the technicals are still somewhat weak in the MACD and the stochastic. The 9-period moving average is still holding very well. And the daily chart is really leading because that's the rudder for the bigger move. And it's saying that it's in an uptrend. I like it. So you are in?
I'm letting my options, they're coming to an end today. I'm going to re-go in on Monday.
Okay. So if you're in options, obviously this is a great time to be taking them off, or you could roll them over. But I would probably do exactly what you're thinking. A bird in the hand in this particular market is fantastic. So you've got what you wanted. I would say the tough thing is going to be if you get out today and over the weekend, the bank, there's a whole nother thing going on with the banks, and gold pushes even higher and silver pushes higher. And that means now on Monday, let's just imagine for you a worst case scenario is that it opens at 45. It's at 44.31 right now. So if you're looking at options, the percentage does make a difference. That's number one. If the silver Wheaton was actually, now it's called Wheaton Precious Metals. If it was going to pull back by the end of the day today, then the premium on the next month's options would actually shrink. But if it closes towards the high, Monday's options are going to be a little bit extended. But at the same time, if it's only a leg B that we're looking at, if it does a new high going into Monday, it should get to a C. What you really want is it gets to a C above the high of the 25th of January, which was at 46.53. You would 53. You'd like it above that, because I do not like charts that make their peak Ds underneath the previous major high, because it means it just doesn't have strength. I love it when it takes out the previous high and it's still not yet in leg D. That's great. So that's kind of what I'm looking at. The weekly chart says that there's probably going to be some resistance in the 45.90 to the high, what did I say, 46.53 or something, 46.53. Going to that 40 high 45 into the 47 area, but that's okay. I mean, you can deal with that. So as I'm looking at it right now, that's the only recommendation I can say, that perhaps today, if you get out of your option, today's the way to look at the next months, only because if there is a gap up on Monday, you'll have to wait for quite a bit of a pullback to start to see the premium at what it might be right now. That's just something for you to look at, and I don't know if that helps you. And if you can hold on 1 second, I just want you to talk about this trend line that I'm looking at in the monthly chart. Can you hold on?
Yes.
Okay, we'll be back with Ari. We're looking at Arcadia, Florida. We're looking at WPM, and that's Wheaton Precious Metals, doing very well. Dow's down 275, S&P's down 20.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, Harry. So we're back, and I wanted to just show you that I've done you might be able to see this on Tiger TV if you're looking, but you'll be able to see it in archive. But I've got a Chapman Wave 1-to-1 extension when that falling axe resistance is broken in the daily chart right here. And that projects it to about the 46.29. Now, this is a conservative way of looking at it. Actually, I should be even more conservative. I should put it over there. And that projects to 46. And remember, 46.53 was the high on the left side. So that's just a projection. There's not a guarantee or anything, but that's just the way I like to look at it. And I'm also going to make this weight transparent. I'm going to make it so you can actually see the price. There it is. So, and then if I do a left side, right side price time match, and I'm going to talk about that in a moment, that we've been able to see on the in the E-mini. I'll use that as an example of some techniques that we use, at least I use. So let me just show you this. So this says that if there is a left side, right side price time match, can I extend it out? I'm not going to push the chart out, but it should go to at least, I've got an extra 2 days, at least the end of March, maybe even the beginning of April. It could happen sooner if it's going to be a 1-to-1 expansion in the diagonal chart pattern that we're looking at. That should take you to the 46 area, and that should be, it's probably going to happen sooner if it's going to happen at all, but within about another week or so. So as this is moving up, the only thing I wanted to mention is that in the weekly chart, you've got a cup formation, and the MACD needs to get back to positive. It's just a little bit, actually, it's zero right now. It's trying to make it the M-shaped pattern. Stochastic is very weak, and the on-balance volume is very weak. So I'm just going to tell you that I would also mention the 43.30 to 42.80 area is really key support over the next week if it suddenly it takes a dive, and who knows if it can do that. But the monthly chart has this pattern that I like to look at with a channel that has inside track repellent and propellant lines, and that just says that it hit resistance each time in the candle on the upside. And now we're looking at, even though it says in March that this is going to be resistance right here at 45.53. You really need to get to 46.60 to say, okay, now I can challenge the upper trend line. That trend line is all the way up in March. It'll be at 48.53. So those are the parameters that I'd be looking at. So I hope that helps you.
Very useful, Basil. Thank you very much.
Thank you very much for calling. Good luck. I'll be watching this trade. It looks so far, it looks pretty good. Thank you for calling. So, folks, let's just do this. I wanted to show you some patterns, and we'll use this opportunity because this is a very weak market right now. It's just there is a lot of news out there, and it has to be put into the context of the whole financial area. And because of that, what I am looking at is, let me just do this. Actually, I just want to go to one quick thing before I wrap up, because I can't. Before I looked at for ARI, I think I stopped in the middle. I just wanted to show you the gold is very strong, very nice, even getting stronger. It's in leg D, going to the left side high, that Chapman wave, rogue wave that was made in the continuous contract on the 2nd of February at 1975.2. And this is a leg D. This leg D needs to go above that, because, I don't like failures underneath the previous high. That was a peak D as well, the Chapman wave methodology. And above that high will start leg D in the monthly chart. Now, what's really important about this is that this is improving that's the weekly chart I was talking about. The monthly chart has made this U-shaped pattern. Now it's got a second U, and this is very, very strong. So going to that and then moving it over to the SI, which is a silver, you can see silver's just stuck at that 200 period exponential moving average. That's the reason why I was giving those parameters on the wheat and metals, precious metals, for ARI, that it needs to do that and needs speed to be able to garner the momentum to the upside. So we'll see if silver is able on Monday to break above the high that was made 3 days ago in the continuous contract 22.52. That's going to be very good action. That'll be start leg B, pushing away from the magnet of the 200 period moving average. I wanted to show you just high-grade copper right now. High-grade copper failed at the pink 9-period moving average. Now it's under the 200 period moving average. Not a good sign. Looking at the dollar DXY, the DXY it's not bad. It's down 22 ticks at 104.23. But and that's because I think international money is coming into the dollar. It's still the strongest. America's still the strongest economic benchmark for the dollar. That's the way I look at it. And then gold is the go-to. What can I call it? It's like the VIX index for international for countries. When there's a financial crisis, they go to gold. So gold is really your icon for fear. And that's acting very, very well. Now, looking at the EUR USD, just want to get these out the way, and then I want to show you something quite interesting. It tried to rally, it keeps running and fading. Now it's off the 200 period moving average, but it's tested it so many times that it looks like it needs to break. You see, if the euro wasn't trading at 1.08 right now, instead of 1.0, if it was trading at 1.08 instead of 1.062, I say, wow, the dollar should be cratering. But you can see what this is. This has to do with the international concerns via the bank area. And that's now an A-. So right there. And if you look at the USD JPY, here we go. USD JPY, that is now a peak G. I didn't want to put a down arrow yet until it went under the 200 period moving average, and then I got the 9 period moving average under the 14. Now I can get rid of the alternate count and say that is a G, and it's in a sell mode. That's the daily. The monthly is still in a sell mode. It's been that way for a long time. And if you're looking at so we've done that. Now I wanted to show you bonds. And bonds are running strongly up $1, almost $2 at 132 and 12/30 seconds. Underneath this trend line here, this is that falling axe resistance, and under the 200 period moving average. So we're going to be watching this very closely. Fed's got an announcement coming up next week. I bet that they are going this way and that way and this way and that way, but they would like very much to stick to their quarter-point rise. They would like to do that. They might be forced to say, oh, we can't do that. That's going to be a big test for the Fed. Do they need to do it? My contention is that all the specifics that we look for in a recession are already underway. There are some stocks that are individually doing very well, but I wouldn't be surprised if the jobs numbers at some point within the next few weeks, it just suddenly there's this huge deterioration, and that's going to be the issue. So maybe, and the Fed's always late, so we'll see how that works out. But this is a peak D in the U.S. daily. Let me just show you the TLT, because more people look at the TLT than actual bonds. So the TLT is the iShares Treasury 20-year bond ETF. That is only gone to PP, and it's holding pretty well. It's under the 108.80 200-period exponential moving average. We'll be back in a moment. Dow's down 382. S&P's down 36.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, let me just check something out. Yeah, so I decided that we would go into Schwab only because it had that Chapman wave climax, volume climax at the bottom of its low. And I made it it had a great day yesterday, but I decided that we tighten the stop. We're out of it. And going into that whole financial sector, I think was, at the time, I thought, use as a trade. I could have added as a trade, just taking money off on the rally, but we didn't. So we got a very tight stop, got taken out, and I'm stepping aside. But it is that volume. I'm going to be watching it closely to see if that that round number, let me just go to it right now. If the round number low is going to stay all the way through, let me just go to it right here, SCHW, that 45 round number low holds. The rule of this particular technique is that it should rally for 28 sessions without taking out that 45 low. And if it holds very well after about getting to that last period of the 28 days, 28 sessions, it should go for 56. Well, in this particular instance, we're in one of the worst areas of the market right now. I should just be treating it as a watch, but that's okay. Now, the other thing is that, yes, we were in the UDOW. We are still in the UDOW, which is 3 times long. It took off a nice gain yesterday. It's still up from our entry point because we got it at before the actual market low of the day the other day. So that's the way to do it. But just holding a short position is really the way to have been for weeks and weeks and weeks. Now, let's just go to this. I want you to say crude oil. The question came in, where's the low for crude oil? Well, I don't think you can talk about a low in crude oil because it seems to me you've got 3 things going against crude oil right now. Number one is internationally, if you go to the copper chart, if you go to wood, which is the iShares Global and Timber Forestry ETF, they are showing weakness, the kind of weakness that says, yes, there's been some global strength, but now there's probably back to a little bit of weakness. That's number one. Number two is if you're looking at internationally, crude oil pulling back like this. Yes, there've been it's now 12% up or 13% electric vehicles. It's still very early in the game, so that's not impacting it. No, I just think this is a slowdown that we're looking at. Number 3, and this is really, really important. In this particular pattern right here in the weekly chart, if I was to do the usual thing that I look at, I would say with a breakdown like this becomes a propeller shaft. But I like to be very conservative about these things. So I would normally go to the upside right there and go down and say, okay, there's your upside. That's the parameters that you use for the upside. I'll make it blue so that you can see it. No, you can't even see it. Doesn't matter. Weight, I'll make it even a little weightier. There you are. Oh, there it is. And then for the downside, I don't go to the bottom. I go to the top. So I go down here. We'll have to make this a different color. Make this blue. And this is, for now, we're going to make this pink. Pink. Hey, you can just about see it. And then I would go right here, from there to there. So my target would be 62. It's at 66 right now. 62 would be the first target. Then what I do is I take the midpoint of the channel. That's so important always in my work. And I would lower it to there. All right? So I'm not doing that now. I like to do things one step at a time. So I'm going to put this in and we'll see what happens. So it's the 62s that's going to be very, very important. More significant right now is that within the context of, okay, so this is what I want you to do. So so I was asked about Netflix. So let me just, Netflix. Yeah, you see, Netflix got in a fantastic move from the 81 area all the way to Netflix. Had a fantastic move from the, I was going to say 281, but it was 273, all the way to the 380. I mean, that's a spectacular move. And now it's come back down. And if this starts to fail, so this daily is in a sell mode. This weekly is just about to go to a sell signal. I have to wait for the end of the day, but it's probably going to go to a sell signal. And then you've got this expanding wedge on the upside instead of always looking at the downside. And this becomes your trend line. And I can put this in right here, pink. I'm not going to get to the stuff I wanted to do, which is live. But I like to answer the questions that come in. So here we are. So here's the Chapman wave. This was the inside track repellent zone. Now this is in the propellant zone, if it works, and I don't know if it's going to. And look at this, it held it. So at any point in the next 2 weeks, if Netflix closes, this is the weekly chart, closes under 282, that's not a good sign. That means you've confirmed. I might go to a sell signal. That means you're going to probably go to a sell mode because then it'll turn pink, the 9 under the 14, and a peak B in the daily. The next question was CVS. Well, let's go to CVX first of all. CVX, remember I said not acting very well. I think it's tough. I wasn't sure about shorting it, but I said I see it coming down sharply. And now it's holding in the big rectangle formation. It's at 153, down $1.23. I just wanted to show you. Now you can go to CVS. I actually, for myself, often put them together, even though they're completely different stocks. And the one is in the whole drug store and pharmacy area. You've got 110-ish as a high back in, I think it was February of 2022. And you are at a low. Look, there's a 1 to even a more than 1-to-1 to the downside. And the person asked, where would an entry be? I'd say I'd hold off. 72 to 70 is going to be absolutely imperative. It's almost like the crude oil chart. 72 to 70 will be that would be the test for me, because it's already on a monthly basis. It's underneath the support that was in August and July and August of 2021 in the 79 area. Here it is at 74. Be careful. And this is telling us a big story about the general market. I think I did almost everything. Oh, the TLT, what was the question? The TY, what was that we were looking at yesterday? I did that. TUA, this is the 2-year, right? I think I got a better result in the TYA. Oh, TUA. Oh, there it is. Yeah, so that spiked up to a peak B. And that was a 2-year. So I'd be looking at this and saying it's holding quite well. It's up 42 cents today, 25.70. Remember, I was looking at the VIX index, which is up $1.87 at 24.86 right now. And I said, try over the last year, I've been saying, try to keep all these separate icons, keep them separate. That is gold, the relationship of gold to the dollar. It isn't exactly like it used to be. The VIX index to the general market isn't like it used to be. And now we're finding that even within the yields, they are doing different things. And therefore, I'm saying that the 2 years, this is the 2-year, 2.574, 25.74, is going to do anything. If it suddenly pulls back sharply under yesterday's candle, if it pulls back under 25.16, that's going to tell us that, there's fell, for that particular segment. It's going to tell us that yields are coming down. The Fed might have an easier time making decisions. If all of a sudden it spikes over 26.26, that's another story altogether. I hope that helps you. I'll be back. Dow's not coming back. It's down 375.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So I just wanted to show you some things. We're always looking for 4 higher peaks in the Chapman wave. You alphabetize them from the low bar. You go peak A, the next high is peak B, next is C, and then D. It can go all the way to E, F, and G, but at D, a whole bunch of things can happen. So right here at 8 o'clock, we get to a D and we turn down, and we start pulling back sharply. And then at 8:50, I'm looking at this and I'm saying, aha, I like what I see, because the stochastic gave a really sharp turnaround. The MACD also was at a higher level, so it's a positive divergence. And what I'm looking at is, if there is a rally, then if this is the midpoint, the low that was made, I go to the left side high and I draw in a sideways bar, like a rectangle. Now, you could use just a single line. It's fine. I've got these tools in TradeStation. Makes it really easy. They have really good tools for these things. I wish they would have a percentage line that I could just put it in and then draw it, and it says exactly what that percentage up or down is. Such an easy thing for doing. I must mention it sometime to them. Anyway, so it goes peak A, pulls back, peak B, and all of a sudden, the green line, the 9-period moving average, as the MACD is accelerating up, the stochastic is moving very nicely. On balance still is very weak, but you get your crossover at about 39.65, and look what it does. It holds steadily, and here's your left side, right side price time match. Look at that, to that high, to my plumb line, the midpoint. You don't know if it's the midpoint, to the Chapman wave inside wedge target resistance line. It goes right there to peak B, but then it continues higher, and the green 9-period moving average can keep you in the trade, peak C1, C2. That means it didn't go to a D, but there was a technical turn down in, say, the on-balance volume, which means you could count it as a peak D, false peak D, C1, C2, and then it pulls back, holds the 9-period moving average. Look at that, underneath the 14. The green is over the 14, holds, and it goes to peak D. Where's peak D? At this left side, right side, price time match, bar symmetry. The same number of bars to this high is the same number of bars. It got close, but it was within 2 bars. It gets to D, pulls back, and a very quick E. Where's E? Right at the former peak D that you saw right there at 8 o'clock, at the little doji candle at 8:02 at 39.87.25. And then what does it do? It pulls back, and this exact plumb line, it breaks out to that high that goes to a leg F, and at 39.89 or close to 39, about 30, what was it, 39.70? I can't remember now. 30. There it is. 39.8650. Right there, 30. Yeah, 30. Why am I talking? That's a 39.9025. There's this exact to the bar. Look at the symmetry. Look at that price symmetry. Isn't that incredible? You can use Fibonacci. You can do anything you want. You can use Chapman wave, MACDs, anything. It doesn't matter. It just did it. Bar symmetry, left side to the right side, goes all the way to the 39.86 level, and then it starts coming down. So when it comes down, I either use if it's a peak D, I like to use that. If it's an EF, I try to find a cup formation low, and look what happened. It turned down. From that point, it goes a little higher. It's almost like a rogue wave. It spikes above. The MACD's not quite as strong. The stochastic's much weaker. On-balance volume is already giving you a turn down. And what does it do? It comes down. I've drawn the X right there. It missed it by 2 bars and about a point, and then it starts rallying again. But that rally had the stochastic. I don't like this at all. When the stochastic doesn't hold. Remember, I say over 80% and flat is excellent. Over 80% for like 3 or 4 bars and then going under 80. That is just a clue to a sharp move down. And what did we do? We went to the doji high at 39.92.50. I was on my show, so there was nothing I could do. And we came down. As we were coming down, we were over here, and I drew in from that peak F top, from the low that was made right there at 8:51 in the morning Eastern time, 39.56.75, I drew in potential bar symmetry. Now, I usually get a candle, a left side peak, and I say, well, I get clues to say, well, that would be the target. But I didn't do that because I didn't have time. But normally I'd go to, say, a D, and I'd draw it in, and I'd say, okay, this tells me that I won't continue it just yet. Actually, what I'll do is I'll draw this in, and I'll extend it. I won't know where it's going, but that's kind of what I'd be looking at, extend right. Okay, so now what's happened is we're coming down, 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 and look what happened. It hit that trend line exactly. It came to it was a little early in breaking this left side low, but it did break it. It tried to rally the pink 9-period moving average, which has been pink ever since 39.80, and that was at 10:13. It's still pink, still pink, still pink, and right now it's about to try to change color. But look at that, trough F. I thought I'd just do some of this live because it helps. A lot of people do use Chapman wave methodology, so I thought I'd just show you right there. And then it went to a peak A and a B. Oh, look at this. I'd already drawn this in some time ago as a potential for a left right side from the low that was made at 12 o'clock right there. But I always like to bump up against the Grand Canyon wall on the left. So I went to this low right here. I went to this candle of 11:30 yesterday on the 16th. And I said, let's see if we can go all the way through. This is like a big rectangle. This is like a rectangle formation which eventually takes out the lows. Right? Look at this. That's a rectangle formation right there. Right there. And now we've taken out the low. Now there should be a rally to attempt, just because it was so quick, to say goodbye to its friends, get back into the 39.64 level, and that's going to 39.64 to 39.71 if it can even do that. Wow, that's a big ask. 39.64. That's a big ask, but at least to the 39. What was the low there? Trough G, right there. Trough G. That's it. 39.56. So we'll see if that's going to work. Now, this is an alternate count G/C right there. Lowercase c, lowercase on the way down. And this is now a D. All right. Okay, I thought I'd go through some of these. And you remember that blue line that I drew in days and days ago as the midpoint of the channel? This is still there. I thought, hey, why not keep it there? Wow, that's 3,900. And we're at 39.51. Don't say that. Oh, anyway, so we were looking at this, and I thought I'd just go through some of these. Okay, now I can get to some of the questions. Some of the questions pertain to, I wrote them down. Wait, where is this? Yes. Okay. Oh, Baba. B-A-B-A. I don't want to do that in the short-term chart. I want this the daily. So this is what I want to look at here. So the FXI, which is the China big large caps, I'd said that was a huge move up from the 21-ish area all the way to the 33s. And now it's a down move, and this down move has to be monitored because this is part of the international aspect that you're looking at. And this is just saying to me, this is such a weak move that you've got to be really careful because under 26, the FXI.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, so we're looking at a question about PRQR trading at 3.29, up 8 cents, up 2.65 in a market like this. You know, the biotechs have their own life cycle. So this says to me in the rectangle formation that there should be an attempt over the next week and a half, as long as it doesn't close below $3.10 in the next 2 or 3 days, there's a chance that it should go to 3.58. It might take a little time because you can see all it's doing here, if it didn't have this ugly 2-day pullback, I shouldn't say ugly because it's way off the low of 238 or 240, but that just spoiled things because it was going very nicely up, higher highs and higher lows. Oh, I missed something. I knew there was something wrong. There's the B. That's the B. That's why it's a C over there, because that B is missing. Yeah. So all in all, what we're looking at is that this is working very nicely towards the upside, and that would be the support level. The MACD is good. The stochastic is okay at 78% on balance volumes going. But as a biotech, anything can happen. So let me do this before we run out of time. I just want to say the VIX index, look at this. The VIX index is just off the 200-period moving average. It's up 2.14, up 9%. I mean, that's a lot at 25.13. The fear factor in this market, when I speak to anyone now, lay people that I talk to, it's just uncanny how many people are just shaking their heads saying, we don't know what to do. Actually, I'm also surprised that there are so many people that have just held on for the last year that I'm talking to. Anything they've had, they're just kind of holding on. They've taken a little bit off, but so this says to me this market is fraught with two things. One is there are purely technical aspects that say, be very careful, be very selective. There are other areas that say there is opportunity, but you've got to treat that opportunity as short-lived and take your profits each time you get them, or raise your stop accordingly. But you've got to have stops in place. You've got to be careful. Check out my opening call, my daily newsletter. Have a wonderful weekend. Stay tuned for Steve Rhodes. Once again, all those celebrating. Thank you.